Hello, everybody, and welcome back. I'm Travis Watts, the Director of Investor Relations at Ashcroft Capital. In this short video, we're talking about how to determine NOI, or net operating income. Net operating income is the number one driver behind the valuation of commercial real estate. Essentially, it's the net income after operations after all expenses have been paid. And this can be a useful number in a number of situations, and I'll share with you a few of those now. The first is if you take the net operating income and divide by the price of the property, that gives you the cap rate or the capitalization rate. If you're not familiar with cap rate, check out the video called Cap Rates Explained here on Multifamily Investing 101. Another useful way to use NOI is to take net operating income divided by the debt service, and that gives you your debt service ratio, another metric that a lot of investors look at. Or if you took net operating income minus debt service, that tells you the cash flow on the property. So now I'll share with you the steps on how to calculate the net operating income on a property. First, you take your scheduled rents. And what this is the assumption if all units on a property were fully occupied and rented for the entire 12-month period throughout the year, that's your scheduled rents. You take that amount, then you minus out the assumed vacancy, and that's how many units might potentially be vacant throughout the year on average. Then you add in additional income sources, which could be late fees. This could be application fees. This could be laundry fees. It's any additional income source on the property not directly tied to the rent. So by doing all of that, it gives you the effective gross income, or the EGI, which is essentially your net revenue. Then you minus out operating expenses on the property. And a disclaimer here, what's not included in the operating expenses would be any debt or financing costs. Instead, what we're talking about are real estate taxes, insurance, property management, utilities, and repairs, for example. That gives you your total expenses. So here's how we tie it all together. You take your effective gross income minus the total operating expenses. That gives you the net operating income. With that, I appreciate you watching. I hope I was able to explain a little better what net operating income is, how it works, how to calculate it. And as always, if you have further questions or wish to connect one-on-one to discuss in more detail, you can reach me at travis@ashcroftcapital.com. I would be happy to explain. Thanks for tuning in.